Good day, all. I'm Epstein, and here we are with your metal market wrap-up, your weekend edition for this February 2nd, 2024. All right, my friends, what a crazy week, all right? The FOMC meeting on Wednesday, where the Fed chair made it known, agreeing with basically what I said, that March is too soon to do anything, that the data wasn't yet there. Well, today we had data that was just blowout data on the jobs market. If you take a look, we added 353,000 jobs. I review this in detail in the SPDR ETF and in the financial market one, so I'm not going to do that. You can just hit pause there and you'll see the numbers. Rather, we've got two reports coming out Monday that you should look at, and a lot of earnings reports that are all coming out. So it's service sector PMI and then service indices that we're going to be getting. So pay attention to those. They're going to be very important. But what this jobs report today did is it sealed the fate of all the naysayers who were still holding out, and they were, that this report would be weak, and weak would get the Fed to move. I gave you numbers this week, said, hey, if it gets under 160,000, it's probably going to get those naysayers still saying the Fed has got it wrong. And I said, gee, if it's a strong number over 215,000 or 220, nah, then the Fed's got it. I never saw this type of number coming, and nor did anyone else. No one in surveys that I looked at, Reuters, Dow, Bloomberg, I didn't see anybody with numbers like this. Big gains, yes. Now, we did know that we would see revisions being made. And this is the time when you make them. But those revisions were actually higher, not down. So, no. You'll be lucky if it's going to be the June report, maybe the one before that, for the Fed meeting where they can do that, if they have to do it at all. And I don't know why people keep saying there has to be a cut here. What you have going on is full employment, spending, businesses doing well, businesses, we hear layoffs galore, but the jobs, these people are getting positions in other areas. Does that sound like you've got to start cutting rates anytime soon? So, I know I keep hearing it, and I know that where we're at historically are restrictive numbers. The timing just isn't here right now. Now, for the gold market, this was a killer day to the downside. I mean, the last thing gold wants to hear is interest rates are going to stay higher for longer and the dollar's going up. And that's what it got today. So for the week, you're down a bit. You didn't crash. For the week, you're down not even 1 percentage point, two-thirds of a percentage point. That was, by the way, let me get this right, that's for the month. And we're only at the beginning of the month. I know I said that wrong. For the week, you were up. I'm laughing. I mean, you were up almost a percentage point. And when we take a look at the charts, you can see that you're sort of in the middle of nowhere here. The market is still torn with this. We still have inflation. It's not collapsing. Then the market is torn with this. We have a strong consumer that's got plenty of money. Why can't they keep feeding inflation? They're going to have money to chase products. And everything I'm seeing doesn't show that we've got supply in warehouses that are overwhelming the market. Have you seen the big Christmas sales? They're not there. Do you see them? I'll be looking to see the football sales on TV. How desperate are they to move those TVs? That'll give me another idea. When we take a look at a weekly chart, we still have higher lows, but we have had and still have lower highs. So you're narrowing in the market like that and effectively going nowhere for the time being. The support is back at the 2003 level. 2000 is not a weak number. Yes, it's well under the 2150 that we were up to, but it's still not a weak number. And you're $100, $114 off the highs right now. When we look at Bollinger Bands, you're nowhere near them. The trend up, but the market did stop against those bands, and momentum is down. So the making is here for the market to retrace back to the 18-week. Why? Does the market even respond to the U.S. firing in Syria or Iraq? No, you know better than that. Is the market responding to the Houthis, firing their missiles today into Israel, and it was shot down by their aero defense system? No, everything's picking up. The war isn't ratcheting down there. The war is ratcheting up. So far, what's been avoided is direct confrontation of the U.S. and Iran head to head. Right now, it's still through the surrogates, but that can pick up and then you don't know where you're going. That will be friendly gold in the end if it takes on that type of arena. On the other hand, what if there's a peace that can be reached and we start seeing then Hamas accept the terms that Israel's laying out? Hamas is in no condition to lay out terms. Hamas is in the position to take terms. Let's understand what that is. 30% of Gaza is wiped off the map. 27,000 people are dead. It'll keep going until terms are accepted. Got it? That's how it's going to work. And the world can condemn Israel all at once. This is how it'll work. And then the world has to turn to Hamas and say, let's get this over. That's how this ends. My interpretation of it, at least. And yes, I think Israel wants this to end. I mean, at home, how many people you got to kill? You think they're not thinking that? You think that the people don't want to get whatever remaining hostages are alive? I have no idea how many are alive back. And to see this end and get the soldiers back, let the industry get going there. These are the things you got to think about. When we look at the gold-silver ratio, it's still moving in favor of gold, not helping the silver at all. And silver market, all it did is rally up to the 18-week average and stall. If this week's lows are taken out, you could open up the door to get back to the lower Bollinger Band at 2167. And on the chart, there's nothing at all bullish. In the copper market is got a pattern of a higher high, lower low, but it's all taking place over the 18-week average. If China could somehow get the banks to jump on board and help with housing, it would help the copper. I don't think the banks will do it. I think they watch Evergrande go under. They're watching all the others, and they're going, look at all these empty apartments. You want us to put good money into it, and then you want to criticize us when those loans go belly up or those developers go belly up or whatever the hell happens. That's the problem that's going on in the market there, and it's one of the reasons copper isn't moving just yet. Platinum's acting like it wants to be bearish. In all fairness here, if this week's lows are taken out, you'll have lower highs, then lower lows. You're actually in the bear camp at that point in time. In the dollar index, all I was looking for, and you've heard me say it, was one of the price counts that we have at the Linn Group was in the 104 area. I love the price count work that they have. And I kept looking at it saying that'd be a bear market rally off the weekly chart right into that number. Kaboom, you're there. This is not the area I get bullish on the dollar. This is where I think the dollar gets ready to stall out, and that's how I start looking at all that at this point. So one of the things I'd like you to do is join me in the morning as I come up with trade ideas for you. Now, what do I mean by that? And then let me get over here to help you with it. There we are. In the morning, 5:15 in the morning, I'm recording. I'm telling you what went on in Asia, Europe, what reports are coming out, and then you and I dive into charts. Everything I do is not based on fundamentals. Did you hear me? Not. I stand out of the way of fundamentals. The chart knows everything. Once reports are out, they're in the market's on to something else, whatever that is. That's our job, yours and mine, in the morning to unlock. We look at daily charts, weekly charts, make sure they match. 5 indicators, just 5. How are they saying? What are they saying about the market? Will there be good trades? Absolutely. Will there be bad trades? Absolutely. All right, how bad is bad? My job is to keep them small. Your job on the big ones, let's let them run. How many can we come up with in a week and give you ideas for trading? That's my goal. I want to put out as many as we can there for these. There'll be a mixture of you hold on for the long term. There'll be mixtures of swing trades. Nothing I do is a day trade by design unless the stop orders hit on the entry and I'm wrong, or it moves so much that your profit objective is hit. Barring that, no, I'm looking for the medium cycle and a lot of long-term trades. So join me. IraEpstein.com. The cursor's at the top here. It'll take you into the research area. The cost, it's minor. It's a cup of coffee. I swear to you, 22 videos. Go out and buy that cup of coffee or your cappuccino better. And you're more than that typically. And what happens? It's out of your system in 4 hours. You're getting mine the next morning and the next morning. 22 of them, including the weekly. Give it a try. IRAPstein.com, move your cursor to the top, go to the research area. Have a great weekend.